It is the greatest paradox of our age. Every nation, rich or poor, powerful or fragile, is drowning in debt. The world economy, a vast machine of trade and finance, now rests upon a mountain of obligations exceeding $315 trillion. That number is so large it defies imagination. It is more than 3 times the size of global GDP. And yet, debt is not treated as an anomaly. It is the system itself. Debt is the oxygen of modern economies. Without it, growth suffocates. With too much of it, collapse becomes inevitable. This is the paradox. Nations borrow to survive, but in borrowing, they plant the seeds of their own fragility.
The origins of debt. To understand why every country is always in debt, we must travel back to the birth of modern finance. In the 17th century, the Dutch and the British pioneered government bonds, pieces of paper promising repayment with interest. These bonds allowed states to finance wars, build navies, and expand empires without waiting for tax revenues. Debt became a weapon of power. By the 20th century, debt was no longer just a tool of kings and governments. It became the lifeblood of households, corporations, and entire nations. The United States financed its rise through borrowing. Europe rebuilt after 2 world wars with loans. Developing nations sought credit to industrialize. Debt was no longer exceptional, it was universal.
The pattern of excess. But history reveals a chilling pattern. When debt levels soar, when asset valuations reach extremes, when leverage spreads across every sector, collapse follows with mechanical precision. In 1929, the U.S. stock market had risen 400% in just 5 years. Margin debt, borrowed money used to buy stocks, reached unprecedented levels. Economists declared a permanently high plateau. Then October came, and markets fell 89% over 3 years. In 2008, the story repeated. Housing prices doubled in less than a decade. Mortgage debt swelled to 100% of GDP. Banks packaged subprime loans into securities, believing housing never falls nationally. When defaults began, the illusion shattered. The S&P 500 collapsed 57%, and now, in 2025, the same conditions exist again. Not similar, identical.
The setup, January 2025. The U.S. stock market stands at S&P 6,000. The Buffett indicator, market capitalization to GDP, reads 185%. Warren Buffett once warned that anything above 120% was dangerous. The dot-com bubble peaked at 145%, the 2007 crisis at 135%. Today, we are higher than both. Real estate tells the same story. The median home price is $420,000, while median income is $75,000, a ratio of 5.6 to 1. Historically sustainable levels are 3 to 1. Housing is nearly 90% overvalued. Corporate debt has reached $13.5 trillion, 72% of GDP, far higher than before the last crisis. Government debt stands at $36 trillion, 120% of GDP, with interest payments approaching $1 trillion annually. Consumer debt adds another $17 trillion. In total, U.S. debt exceeds $90 trillion, 320% of GDP. Every sector is leveraged beyond historical norms. Economists call it the everything bubble.
The Federal Reserve's trap. For 15 years, the Federal Reserve has trained investors to believe in salvation. Every dip in markets was met with lower interest rates or quantitative easing. Between 2008 and 2022, the Fed printed $8 trillion. Investors learned a simple mantra: buy the dip, the Fed will save you. But the Fed has exhausted its ammunition.
Interest rates sat at zero for a decade. Its balance sheet ballooned from $800 billion in 2008 to $9 trillion in 2022. When inflation surged in 2021-2022, the Fed was forced to raise rates from 0% to 5.5% in just 18 months, the fastest tightening in 40 years. Now the trap is set. If rates remain high, debt becomes unpayable. Corporations that borrowed at 3% must refinance at 7%. Governments face spiraling interest costs. Households buckle under mortgages and credit cards. But if rates fall, inflation roars back. There is no good option.
The global dimension. This is not just an American story. Globally, debt has reached $315 trillion. China's property sector is drowning in liabilities. Europe's governments carry debts exceeding their GDP. Japan's debt-to-GDP ratio is over 250%, the highest in the developed world. Emerging markets, from Argentina to Turkey, borrow in dollars they cannot print. Debt has become the universal condition of nations. It is the price of globalization, the cost of prosperity, the shadow of progress.
Why debt never disappears. The reason every country is always in debt lies in the mechanics of modern money. Banks create credit by lending. Governments issue bonds to finance deficits. Corporations borrow to expand. Households borrow to consume. Debt is not an accident. It is the architecture of the system. When one sector pays down debt, another borrows more. When governments run surpluses, households take on mortgages. When corporations deleverage, states borrow to stimulate growth. The system requires debt to function. Without it, money supply contracts, economies shrink, and unemployment rises. Debt is not just tolerated, it is demanded.
The human stakes behind the numbers are lives. A family stretched thin by mortgage payments. A student burdened with loans. A worker juggling credit card debt. A government forced to choose between social programs and interest payments. Debt is not abstract. It is the invisible chain binding billions of people to a system they cannot escape. The coming reckoning. History suggests that when debt, leverage, and belief in invincibility align, collapse follows. In 1929, in 2008, and now in 2025, the stage is set. Economists warn that late 2026 or early 2027 may bring the next great reckoning. This is not prophecy. It is pattern recognition. Reflection. Debt is both the engine of progress and the harbinger of collapse. Nations borrow to build, to fight, to grow. But in borrowing, they create obligations that can never truly be repaid. The world is locked in a cycle. Debt fuels prosperity, prosperity breeds excess, excess triggers collapse, collapse demands more debt. Every country is always in debt because debt is the system itself. The question is not whether nations will borrow, but how long they can sustain the illusion before the cycle resets once again. And as history whispers its warnings, we stand at the edge of another precipice. The numbers are clear. The conditions are identical. The stage is set. The illusion of stability is the most dangerous illusion of all. Debt, when multiplied across households, corporations, and governments, creates a fragile equilibrium. It feels solid until the smallest tremor reveals how hollow the foundation truly is. In 1929, the tremor was margin calls. In 2008, it was subprime mortgage defaults. In 2025, the tremor could be anything: a geopolitical shock, a sudden liquidity freeze, or a wave of corporate bankruptcies. The trigger does not matter. What matters is the structure, and the structure today is built on leverage stacked higher than ever before. The mechanics of collapse. When debt levels are extreme, collapse follows a predictable sequence. First comes denial. This time is different. Then comes the trigger event. Investors scramble to liquidate, but selling only accelerates the fall. Asset prices plunge, debt becomes unpayable, defaults spread, banks tighten credit. The cycle feeds on itself. This is why debt crises are so devastating. They are not isolated events. They cascade through every sector. A family loses their home, a corporation defaults on bonds, a government faces soaring borrowing costs. Each collapse triggers another.
The global web of debt. In today's interconnected world, debt is not confined within borders. A crisis in one nation spreads instantly across the globe. When U.S. mortgage-backed securities imploded in 2008, European banks collapsed. When China's property sector falters, commodity exporters from Brazil to Australia feel the shock. The global debt web means no country is immune. Nations borrow in foreign currencies. Corporations rely on global credit markets. Investors chase yield across continents. Debt is globalized, and so is risk. The human cost of the debt cycle. Behind every trillion-dollar statistic are human lives. In Argentina, inflation erodes savings as government debt spirals. In Greece, austerity measures slash pensions and wages to service loans. In the United States, millions of students carry debt into middle age. Debt is not just numbers on a balance sheet. It is the silent force shaping destinies. It determines whether a family owns a home, whether a nation builds infrastructure, whether a generation feels secure or trapped.
The illusion of control. Central banks and governments project confidence. They insist debt is manageable, that growth will outpace obligations, that inflation can be contained. But history shows otherwise. In 1929, policymakers believed markets were invincible. In 2008, they believed housing was unshakable. In 2025, they believe central banks can prevent collapse. Yet the paradox remains. The very tools used to stabilize, low interest rates, money printing, deficit spending, are the same tools that inflate bubbles and magnify debt. The coming reckoning. If history is a guide, the next great reckoning will arrive between late 2026 and early 2027. The conditions are identical to past collapses: extreme valuations, record debt, excessive leverage, and widespread belief in invincibility. This is not prophecy, it is pattern recognition. The crash is not inevitable because of fate, it is inevitable because of mathematics. Debt cannot expand forever. Interest cannot be ignored forever. Illusions cannot hold forever.
Reflection. Why debt persists. And yet, debt will not disappear. Even after collapse, nations borrow again. After 1929, governments borrowed to fight depression. After 2008, they borrowed to rescue banks. After 2027, they will borrow to rebuild. Debt is the cycle. It is the system. It is the paradox of progress. Every country is always in debt because debt is the architecture of modern economies. The question is not whether nations will borrow. The question is how long they can sustain the illusion before the cycle resets once again. The cycle of debt is not just an economic reality. It is a psychological trap. Human beings, whether individuals or nations, are wired to believe in continuity. We assume tomorrow will resemble today. We assume growth will continue, that credit will always be available, that obligations can always be rolled forward. This belief sustains the system, but it also blinds us to its fragility. When markets rise, optimism spreads. Borrowing feels safe. Governments expand programs. Corporations invest aggressively. Households take on mortgages and loans. But optimism is leverage in disguise. It magnifies gains, but it also magnifies losses. Debt as power. Debt is not only a burden, it is also a weapon. The United States finances its military dominance through treasury bonds purchased by investors worldwide. China uses debt to build infrastructure and extend influence through its Belt and Road Initiative. Europe relies on debt to sustain welfare states and social stability. Debt is geopolitical. Nations that control credit markets wield power over those who depend on them. Creditors shape policy. Debtors surrender sovereignty. This is why debt crises are not merely financial. They are political earthquakes. The fragile balance. Consider Japan. With debt exceeding 250% of GDP, it has sustained this imbalance for decades. How? Because most of its debt is held domestically by its own citizens and institutions. Contrast this with Argentina, where debt is denominated in foreign currencies. When the peso collapses, repayment becomes impossible. The difference reveals a deeper truth. Debt sustainability is not about numbers alone. It is about confidence. As long as investors believe repayment is possible, debt can grow. When confidence breaks, collapse follows instantly. The debt spiral. Once collapse begins, debt accelerates the fall. Governments borrow more to stabilize economies. Central banks cut rates to stimulate growth. Corporations restructure loans. Households refinance. Each solution adds more debt to the system. This is the debt spiral. Crises are solved with more borrowing, which plants the seeds of the next crisis. The spiral never ends. It only resets. The present moment. In 2025, the spiral has reached its most dangerous point. Every sector, government, corporate, household, is leveraged simultaneously. The Federal Reserve is trapped between inflation and insolvency. Global debt has reached $315 trillion. Confidence remains high, but history whispers its warning. The stage is set. The trigger is unknown, but the pattern is clear. The human future. What happens when the next collapse arrives? History suggests pain. Unemployment rises, savings vanish, governments impose austerity, social unrest spreads. But history also suggests resilience. After 1929 came the New Deal. After 2008 came reforms and recovery. After 2027, something new will emerge. Debt is not the end, it is the cycle. Humanity rebuilds, borrows again, and continues forward. The question is not whether collapse will come, it is how societies will respond when it does. Closing reflection. Every country is always in debt, because debt is the architecture of modern civilization. It is the invisible scaffolding holding up economies, the silent contract binding nations together, the paradox of progress itself. Debt is power. Debt is fragility. Debt is destiny. And as we stand in 2025, staring at numbers too vast to comprehend, we must remember, history does not repeat randomly. It repeats with mechanical precision. The conditions are identical. The stage is set. The next chapter of the debt cycle is already written. We are simply waiting for the page to turn.
Debt is not only a financial mechanism, it is a mirror reflecting the ambitions and anxieties of societies. Nations borrow because they aspire to grow faster than their resources allow. They borrowed to project strength, to build infrastructure, to fund welfare, to fight wars. But beneath every loan lies a silent wager that tomorrow will be richer than today. When tomorrow fails to deliver, the wager becomes a burden. Debt that once symbolized progress transforms into chains. This is the paradox that has haunted civilizations for centuries. Historical echoes: Rome debased its currency to fund military campaigns, eroding trust in its economy. The French monarchy borrowed heavily to sustain its lavish court, only to collapse into revolution. In the 1980s, Latin America borrowed billions from international lenders, only to face a lost decade when interest rates soared. Each era believed it was different. Each era believed it could manage debt indefinitely. Each era discovered the same truth: debt is manageable until confidence breaks. The invisible hand of credit. Credit is invisible, yet it shapes everything. It determines whether a bridge is built, whether a company expands, whether a family owns a home. It is the unseen force behind prosperity. But it is also the unseen force behind collapse. When credit flows freely, economies boom. When credit dries up, economies suffocate. Debt is the bloodstream of capitalism, and like blood, it must circulate. When circulation stops, the body dies. The present fragility. In 2025, circulation continues but under strain. Interest rates are high, debt levels are extreme. Confidence remains, but it is fragile. A single shock could freeze the system. A geopolitical conflict, a sudden default, a liquidity crisis. Any of these could trigger panic. And once panic begins, debt transforms from scaffolding into wreckage. The human stakes ahead. Imagine the world of 2027. If the cycle breaks, governments will impose austerity. Corporations will cut jobs. Families will lose homes. Social unrest will rise. The optimism of 2025 will feel like a distant memory. But history also suggests resilience. After collapse comes rebuilding. After despair comes innovation. Debt destroys, but it also forces reinvention. Closing reflection. Debt is the paradox of progress. It builds empires and destroys them. It fuels prosperity and magnifies fragility. It is the silent contract binding nations, corporations, and families to a future that may never arrive. Every country is always in debt because debt is the system itself. The cycle cannot be escaped. It can only be endured. And as we stand in 2025, staring at $315 trillion in obligations, we must remember, history does not repeat randomly. It repeats with precision. The conditions are identical. The stage is set. The next chapter is already written.